Trader PhD's Commodity Chat podcast series, bringing you the latest trends in U.S. and global commodity markets, from grain prices to livestock trends, exports to weather impacts. We cover what matters most to your operation. Let's dive in.
Well, welcome back to another episode of Commodity Chat. I'm Dawson Schmidt, the head of market content here at Trader PhD, and joining me as always is our ag market advisor, Nick Lawrence.
Hello, everyone. It's May officially, and that means we only have about 5 months left in this marketing year for corn and beans, and about a month left for wheat. And we've been noticing some interesting threads, some interesting trends here as far as our export sales are concerned. So we thought we'd take this transitional period, you could say, as a great opportunity to look at where we've been for exports and possibly where we're going.
Yeah, definitely. So, to prelude this, of course, just looking at the current marketing year, export sales of corn, soybeans, wheat, all higher year over year for the 24 and 25 season. However, we're kind of looking at some mixed feelings here when it comes to that 2025 crop, with kind of how things are progressing early on here in the marketing seasons for that crop. So kind of looking at commitments for corn for 25 and 26, we're up year over year, but we're kind of the second lowest since 2012 and about 19% below that 5-year average. Unsurprisingly, Mexico is looking fairly good on their sales of, they're going to end up with a great import season, or I guess good export season for us for the current season. It looks like that could continue to be the top importer of U.S. corn next season. Again, that's also followed by Japan. Also from Honduras, which we don't really consider a traditional buyer for the U.S. when we're talking about, who's buying the most, but they are a fairly good buyer of U.S. corn, and so they're popping up on that sales sheet for next marketing year as well. Looking over at soybeans are actually struggling on the marketing year compared to corn. Outstanding sales are down, a good 88% from the 5-year average, and they are the lowest level for this time of the year in 18 years, which was a real surprise for me, kind of looking at the seasonality charts. Most of these sales right now are attributed to unknown destinations. We haven't been confirmed if those are to China. History right now would probably tell us that that's not necessarily the case. While some of these unknown sales could be revealed as China, ongoing trade tensions, reduced buying from the country, kind of putting a pause on trying to jump the gun and assuming that's who's been doing that buying for right now. Other countries, though, are Mexico and Japan and the Netherlands, who outside of China are actually pretty good unknown buyers to where those get switched over to those countries throughout the season. So there is kind of a little bit of a chance where new crop corn and soybean sales could catch up as export activity kind of slows throughout the summer. And I do want to mention, too, is that we have, when we started off this current marketing year, we had very slow China sales. China was late to the game in starting that to where it's looked like we were going to be down year over year, but here we are up year over year.
Yeah, so keep in mind, with corn and soybeans, especially soybeans, being behind, keep in mind these year-to-date numbers. Last year, corn, as comparing this year to last year, was also behind, and it's turning out that we're going to have a very strong export sales year. These numbers do have time to catch up. Last year's volumes were only behind, or so far projected to be behind 2021 when China went on its historic buying spree there for corn. So again, keep in mind, we've got more than enough time to catch up. Corn demand has remained strong, especially with Mexico, their drought and water situation. And then, again, you never know if we get some trade deals to pop up and spur some demand. Soybeans, export-wise, we all know, really did not catch up so much. So this is still something of a red flag that we want to make sure, we're putting out, that export sales there really just haven't grown all that much. So we've got some catching up to do there. Domestic crush, which is kind of a whole different topic for another time. Maybe we can kind of keep pace there. But so for now, corn's behind. It's got plenty of time to catch up. Soybeans comparatively behind and probably still worrisome.
Yeah, and looking over at wheat, too, we mentioned this earlier, is that the transitional period, we have a little bit shorter window for that wheat crop. And so looking at wheat commitments, maybe not as good as corn, but it's a better story than soybeans. We're off to a slower start compared to last year when it comes to those new crop sales. and total commitments are about 17% below that 5-year average. Mexico is popping up as the top buyer so far for new crop. Guatemala's coming behind them. Japan's coming behind them. The Philippines. So we're kind of seeing these typical traditional buyers. So again, sales, we've seen this dip recently in the old crop, but some of those have been switching over to the new crop. So there's maybe some positive news there. But outside of wheat, kind of finishing up on the crop side of things here is looking at cotton. I mean, aside from soybeans, cotton really just does not look great. And that's really unfortunate because we've been looking towards potential better export demand. Maybe we can get that just because cotton does have a little bit left of this marketing year before we switch over to that next one. But right now, as it stands, new crop cotton export sales are off to the slowest start since 2016. Total commitments down about 7% year over year. And Mexico is kind of leading those commitments right now. Pakistan is following them behind. What I find really interesting is that Vietnam's not really in that top seat because Vietnam right now, as it stands, is what's really helping buffer our low China sales for the current marketing year. So kind of concerned on that point just because, we lost China in the current marketing year. I'd really hate to lose Vietnam in that next marketing year. So it'd be nice to see if the U.S., again, with all these trade deal headlines popping around that, maybe Vietnam can be in there because Vietnam is expected to import a record amount of cotton next year, and I'd really like to see the U.S. on that balance sheet versus Brazil, which has been currently taking up a lot of that share, kind of like what they're doing with China.
Yeah, so last year's wheat sales, so far, there's not much time left. Basically, right on the 5-year average. So this year's new crop coming in slightly below that, with plenty of wheat on the market from the southern hemisphere. Strong production prospects, here domestically and from Europe. To me, it should really be no surprise that buyers have essentially been waiting on the market to come to them. And really, high producer owned stocks there over the winter and here through the spring. We all know how that can cause pressure on the market. So to me, not as big of a surprise there. I do think we'll get some marketing opportunities here seasonally, pre-harvest, and I think we should definitely take advantage of those as they come. As for cotton, again, the southern hemisphere has been keeping global importers well supplied. Australia and Brazil have, they've had a decent crop last year, and with the relatively low global demand, and then them having really strong crops, it's going to be tough, for our market to rally too far. And our domestic producers responding to these lower prices, projected to be under 10 million acres this year. And essentially, bottom line, cotton here is looking for its low price gear to get things balanced.
Yeah, definitely some things to think about here as we're progressing through and getting through this current marketing year, looking at that next marketing year. We're going to be watching that closely to see if there's any developments there. Kind of switching gears, though, over to the meat side of things is not looking at exports, but still kind of just looking at our domestic demand here. And so, meat demand, as it stands, as we all know, has been very resilient. That comes back to strong consumer spending, which is, kind of been nothing short of surprising just with the given conditions for many people. I recently heard that when it comes to the consumer, you got to look at what they're doing, not what they're saying. Case in point, recently we had the well-watched University of Michigan's Consumer Sentiment Index. That fell to the lowest since June of 2022, right here in April. And that was back when inflation had peaked. A lot of people took that as a really negative signal when it came to possible consumer spending, including me, just because of watching that current meat demand that has been so tremendous lately. However, when you watch kind of the indices for consumer spending habits, we saw that dip in early April, which could have been, coupled with that index and that early reading, which was even more negative. But we did see a little bit of a recovery here. And so that just goes to show that, we're going to stay, at least for the short term, seasonally high. And so that's kind of a little bit of a thing to kind of suggest that, maybe that balloon is not really yet ready to pop.
Yeah, I would say if you've been talking to me on the phone, I'll take a little bit bigger picture view. If you've been talking to me on the phone over the past year or so, I truly haven't understood why everybody's been so surprised on the consumer, their spending. Here's my case for that. Wage inflation has essentially kept pace with real inflation. And I know I'm going to get some of the terminologies there on inflation, whether it's nominal or real and all those types of things. But basically, wages have kept up with price increases. and especially with meat prices. Meat prices have not expanded as far as some other items on the shelf. And then I think if you add to that in there with an estimated population use of 10% on GLP-1 products, carnivore diet trends, those types of things, or just higher protein type diets on the millennial side especially, to me, the continued consumption of meat is in no way surprising whatsoever. And the consumer really hasn't felt a squeeze yet because, in my opinion, equity in assets hasn't really fallen off to squeeze consumers yet, right? So housing prices haven't really fallen off to the point where, the really dig into any equity that's built into those houses yet, any recreational vehicles, all those types of things. Equity in any of those assets hasn't fallen off to the point where, again, the consumer's upside down on leverage or anything like that. So in my opinion, when you look at the grocery bill, the most expensive part on a calorie return basis is not the protein side of the bill. It is really all the other stuff, right? So anything processed like sides, dips, chips, anything, all the cleaners, anything along those lines. Yes, those are some very expensive line items. But when it comes to the meat side of the bill, to me, when I'm looking at it, it's the biggest bang for the buck. And until that changes, I think the consumer's going to continue to spend.
Yeah, I mean, and you still have the positive side for cattle just in general of tighter supplies. We got some news that maybe the U.S. will restrict cattle imports again from Mexico. They kind of came to a deal where that probably isn't going to happen, but that still doesn't change the fact that we're just overall looking at a tighter supply situation coupled with that resilient consumer. And that just kind of seems to be the positive outlook that we're seeing it with a lot of these trends.
That's right.
But for sure, if you do want to check out a little bit more in detail with the new crop exports, feel free to check that out in the app. We did put out some articles here this week and I think a little bit last week, kind of going into a little bit more detail with that. So feel free to check that out. And as always, I'm Dawson Schmidt.
And I'm Nick Lawrence.
And this has been Commodity Chat on Trader PhD.